winning at trading by losing. What does that actually mean? Well, what I'm actually going to show you here today is last year's trading challenge executed trades. So I'm going to show you the whole executed trades for last year, right the way up to the challenge when we did the challenge update in December. And the point I'm always trying to make is that you don't have to be right all of the time. You can be wrong a heck of a lot of the time. You really don't need to have high win rates in trading in order to make money. And yet most people chase the high win rates because they want to feel that they're right. That's how we are brought up in life, to try and be correct as much as we can be. So it's a fairly normal human behavior, but in trading, much of the time that doesn't actually get you anywhere. And so people end up chasing the holy grail of trying to be right all of the time. So I spent a lot of my time during the course of a year actually being wrong, getting into trades which might actually have a bit of a run for a while. So here's an example here. I remember this trade from the beginning of last year. I had a nice run. I was actually 6R up at that point. 6R. So that's 1 to 6 risk to reward, if people don't understand 6R. At that point, when it was down here at the lows, and then it came all the way back up and stopped me out at break even. Now sometimes they come all the way back up and I haven't even got my stop at break even. So now a lot of traders would be like, "Whoa, Charlie, you had 1 to 6, risk to reward, and you didn't bank it, or you didn't trail your stop down aggressively." No, because there'll be other. That wasn't my target. My target was lower down, wherever the target was. I can't remember now. And so you stay with your plan. And the problem is that people jump around within their plan. They then look for the reasons why they should have come out, or they'll trail their stops aggressively anyway. Well, if you trail your stop aggressively, you're never going to have those much larger risk-reward ratio trades when they come along. So although, like I said, I have lots of trades where I lose or marginal losses, or break-evens as well, you have to go through all those to capture those bigger ones when they do come along. So you still have to throw that fishing line out. You're constantly throwing a fishing line out with trades. So, and yet it's only a few of them in relative terms that are going to be paying you out in a more meaningful way. So I enjoy that process of doing that and just being in trades. A lot of them are just going to retrace back, but I only need those few during the course of the year in relative terms to make some money. Now, on the trading challenge account last year, that realized a gain of around about, from memory, about 130% for last year. Okay, now the challenge account, I do trade more aggressively than my other accounts. I will trade at 2% risk on trades at that one, and not all the time, but up to 2% risk. I do actually vary my position size within that range. So some trades will have a smaller amount of risk, and others will be up to 2% risk. So that does put me in the position to make slightly bigger gains there, like I've just explained. Then I wouldn't make 130% on my main account, for example, because I don't risk enough. So, but that doesn't need to be making big gains anymore. The challenge account, I'm trying to make decent gains on in any one given year in order to do that. So let me just press pause and let's get this document up. Okay, and so now I've got this right down to the beginning of January. There's no further I can go. I'm right at the bottom of this. So let's just start scrolling up through the trades here. So you can see, oh yeah, straight away, lots of losses, but relatively small, in relative terms, small losses. You'll see as we go through the year the difference between losing trades and winners. So I'm just scrolling up. There's a few winners coming, couple of winners coming in here. So again, you can immediately see that the winners on average are bigger than the losses. All of the position sizes you can see are the same. They're all 50,000s. So that's half lots entries. So, but when I do tend to have, most of the time when I have winners, they tend to be bigger than than recent losers. They tend to be. So even here, 270, 216, they're bigger than 237. They're bigger than the average losers that I'm having in that phase. More losers coming through here. Some of them are very small. And then a bigger winner here, and likewise here. So I do have my winners, but there's a lot more losers as in general than I have winners, as you can see. Plenty of losers through here. Yes, it's interspersed with winners, but there's still plenty of losers there. And then really we're getting to, there's a cluster of losers there. We're getting to a point, now we're into February. So by this point in February, I've not really made much money. Or I don't know what the actual equity curve would have been like at that point. But going back here, lots of losers. Yes, the winners, when they come through, are bigger, but not substantially so far. So I'm guessing at this point in the year, I'm probably flat, maybe, whatever, maybe marginally down, maybe marginally up, but there's a lot of losers coming through. So let's go with, I'm down on the year at that point. Then I've had a couple of bigger winners here, okay, but still plenty of losers coming through. There's another bigger winner here. So we're now into late February, there we go, into March, and then we get the big winners come through. So by comparison to those losers, this is when I've obviously got still the same position size, so I've had just a much bigger run out of these trades, and this is where the outsized returns come. So rather than £100, £200, sometimes even a £300 losing trades, like let's go back, like all through here, I think there was a cluster here, look, like those. But by comparison, when the big winners come through, they're so much bigger. And so we're now into early March before I've really made any sizable gains, any material gains on the year. Now, for a lot of traders, that's going to be very difficult because they can't handle going for longer than a week without feeling that they need to be making gains, or even longer than a month. And actually, prior to the beginning here, so that's the beginning of January, in December, I didn't make any money in December of 21 because the markets were chopping around a lot. So really, I'd gone from the November of 2021 was when I last had some sizable gains, through until, as we've just gone through here, really March, when the next sizable gains have come along. But I just follow my processes, just follow what I do, my analysis, the top-down approach, intermarket analysis. It's all important stuff. And then sticking to your guns and staying with the trades. And they will always come through. They'll always come through. It's just a case of sticking to your plan. So then we just carry on going forward. So then we just go back through. Yeah, plenty of losers coming through again. Plenty of losers here. Plenty of losers actually. Yeah, loads coming through here. And now we're coming into April. Losers again. Then we've got a cluster of some nice bigger winners coming through up there, and probably some down in the next page here as well. Yep. So again, clusters of losers, and then when the bigger winners come through, they more than deal with it. There's going to be average winners as well, because there's going to be times when I have just trailed a stop a bit, and it's just come all the way back down and stopped me out. So that's going to happen as well. But again, plenty of losers, then a few winners here. It's just interspersed constantly. Actually, not a bad spell here. Where's this? May. There's a few winners coming through, sort of average winners, decent enough. But in the main, I'm having, on average, a lot more losers than I have. Whoa, what was that one? I don't know what that one was. 15th of June. Yes, I do. That was a mistake. Oh, it was 100,000. Look, it was a bigger. Okay, so it's an individual size. So it's bigger. But even then, that's still, what's that? £650 per half lot. So I remember what that was. I was getting on a plane, and or I was on a plane, I think, around that time. I think it was around that time, and made a mistake on a trade, and as far as I forgot to put the stop loss in, and then the market came down hard and fast against me, and whilst I wasn't there. So you people make errors, don't they? So we are humans after all. Anyway, so we carried on through here. Then we get a cluster of bigger winners again, and you get my gist here. So just carrying on, I'm just going to scroll a little bit faster because this is taking up time on the video now. So, but then we've got some bigger clusters. What's this, into September coming through here, and then again later in September over here. So it's those bigger clusters when they come through, then followed by loads of losers again and some mediocre wins. And then right away through, I guess, until another cluster of losers there. So October, losers, losers, and then a big cluster of winners again coming in late in November there. And then that might be it. That is it. Taking me up to 9th of December, yeah. So, oh yeah, and there's some more down here in 1st of December as well. So, do you need to have a high win rate? No, you do not. Do you need to be making money every week? No, you do not. I see this as the road less traveled. It's not the path, it's not the road that most retail traders want to be on, because they want to be making money every week, every month sort of thing. And of course, there are months and weeks and months where I'm doing that, but that's not my priority. My priority is profitability and following my approach and methods towards the market. So, and I always think, well, if that's what the retail traders out there en masse are doing, if that's what the masses are doing and they're wanting to be right all of the time, and we know that retail traders en masse lose, high percentage of people that get into trading lose money, then why not be doing the opposite to what they are doing? So in fact, it's very comfortable for me operating in what for most people is an uncomfortable arena. Hopefully it's given you some food for thought this Saturday. I'm recording this actually Saturday morning. Markets have been interesting. Obviously those stock markets have been interesting. If I can bring up the S&P here or the NASDAQ, they've all been quite interesting this past week, having some good runs to the upside here. But it's Fed week next week, so anything can change. All going to be interesting in our trading room next week as the huge amount of news and volatility comes our way. Have a lovely weekend. I'll see you soon.